All right, what is going on, everyone? I thought I would start doing some trade breakdowns because I get a lot of questions around what I'm doing, what strategy I'm following, how does it work, and I thought the easiest way to do this is just to break down some trades. So I'm going to go through a little series here where I break down all my positions so far for 2026. And yeah, if you've got any questions, post them down below. I'll try and get back to as many as I can. So I'll kick this off with the first position of the year. So this happened around January 15th, I believe, and it was a short on the DAX, or the Germany 30 index. So this was something I was anticipating happening, looking across all the other indices here. So you can see I mentioned this in the breakdown, weakness across the board, across the indices. This was posted in the group on January 20th. So one thing coming into 2026 that I wanted to be really clear on with my own trading style is when I see things shaping up in the market, I want to strike when the iron's hot. Now, I am a naturally aggressive trader, compared to a lot of people that trade this strategy, but whether it's discretion or intuition, I think you build up a bit of a backlog or a catalog in your mind of seeing things play out again and again. And I hesitated on a few of these moves last year, and I really wanted to maximize the opportunities that presented themselves in 2026. And this was the first one that I saw. So let's start breaking it down. Now, we always start on the daily chart. We are always looking for some sort of daily direction prediction or higher time frame bias. So if we look at the indice here, I had this resistance zone marked out at these relatively recent highs on the DAX, and we're mainly looking for overextended daily runs and looking to get in on a pullback, at least with this part of the strategy. So you can see here on the DAX, we had an initial impulse move here. So this is wave one of the bullish leg, pullback, wave two, pullback, and then we have this exponential move higher for wave three. So we broke the highs here. Now with indices, they can just continue to rocket, especially when there's no we sort of enter price discovery around this point and they can easily move higher. However, what I was looking for before this happened was a pullback to some form of support. So whether it was these highs here in this zone, or we like to use the fib extension tool, or it was 0.382 on the fib. Once I saw deceleration on the daily, I wanted to see a pullback into this area here. So this is what I was looking to capitalize on after this overextended run. And you can see here, compared to these two previous bullish legs, I mean, this run is just huge in comparison. So looking for a bit of a chunky pullback on this area here. Now, that was my daily markup. Pretty simple. I don't really look to overcomplicate it much more than that. And then our entry criteria happens here on the intraday charts. So I've got my zone marked out here on the daily, which I'm monitoring. I'm looking at the 4-hour price, starting to put in this price action where it's rolling over after we had this day of deceleration here, and this little, not really a doji, but a bit of a wick up there. And then the 1 hour is really where I'm trying to confirm my entry criteria. So I don't have the zone drawn on here, but we had that pop up, we started to break down, and then I use the fib again. What I'm looking for my entry criteria here is a clear break or trend change. So we're breaking the 1 hour 50 EMA. We've created a new low, broken these lows here, and I want to see a pullback where we are rejecting 0.382 and the 1 hour 50 EMA. Now, this little bullish candle here would have negated the position for a lot of people. I know Benny probably wouldn't have taken this position just due to that single candle there. But when I looked across here, I noticed that these three candles here were still holding as resistance. So if you imagine a line drawn across there, we still haven't poked back above that area. So I decided to be a little bit more patient. I was expecting weakness across the indices. I wanted to see price just stall here and see if we could break down, and then I'd look to capitalize on the move. So you can see here, we had these two doji candles where the wick's gone up here, rejected 0.618, but we failed to meaningfully hold price above the 1 hour 50 MA. And then we got this bearish engulfing candle back down here to 0.382. Now, that was enough for me to get involved in the position. I know this price action over here would have negated it for a few people, but for me and the way I trade, I was happy enough to see this. Once we had this, what do we got? 1, 2, 3, 4, 5 hours of this 1 hour 50 MA sort of holding price around here, and then we've got a meaningful breakdown right here. Now, if we go down the 5 minute chart, which is where I enter majority of the positions, ideally we enter around this blue line, which is the pivot, and a break of the 5 minute 50 MA with a stop above 0.618 as a minimum. Now you can see I got in a little bit lower, so not an ideal entry, but I wanted that 1 hour confirmation where we broke down. And I just wanted to see price really starting to put in this bearish momentum. So I was happy to wait for that candle to close. So a little bit of a lower entry on the intraday, but it aligned really well on the 1 hour. Now my stop is usually just above 0.618, but we had these wicks here. So I decided to go above these recent 1 hour highs. And you can see that served me well as price decided to pull back here. So if I'd got my normal stop placement, this would have been a full loss of minus 1% when price pulled back here. So I believe this was on a Thursday. And then the Friday, we kind of just did nothing. We consolidated around here. We began to push down. This was really late for me, like 11 p.m., I think. So I was already asleep. I don't stay up and monitor these positions too closely. Once I'm in them, I'm happy to just let them play out. If my thesis is wrong, I'm wrong. So usually I'll be at 1% down here. This would have been where I'd move my stop to break even if I was awake. If that did happen, I would have been quickly taken out. So, you know, having a wider stop here and being the weekend kind of played in my favor on this position where I avoided the full loss. I avoided the break even here, and I was at full risk over the weekend. So this gapping down, I mean, if this went the other way, would have, probably annihilated me. Would have been a very, very quick loss or a loss, including some slippage. But that is part of the game, and I was happy to wear the risk. Like I said, watching this price action on the daily start to decelerate and show signs of rolling over. We had some political stuff happening at the start of the year. I was more than happy to leave my capital on the table. And like I said, if I'm wrong on one move, it's okay. We'll make that back over the long term with a positive expectancy. But on this one, I was happy to wear the risk. We got a big gap down, and price started to break down on the Monday. So I was actually still sitting in negative here with the spreads. But as soon as those spreads settled, it was easy for me to go break even and just monitor what price was going to do. I wasn't sure if we're going to come up and close this gap or just continue the push down. Didn't really do anything over the next sort of day or two. We just sit in here, and then we had another breakdown. I believe this was on the Tuesday, where we tapped into the top part of that zone or range there, and that was me out of the full position for 7%. And yeah, great way to start the year. Super simple play. Yeah, a bit of a hybrid entry model compared to what we'd usually take, but like I said, I was more than happy to commit capital to this position, just seeing how the markets were moving at the time. And, we were quite patient, waiting 2 weeks to get into something at the start of the year. And yeah, that's my first position for the year, short on the DAX for 7%.